Right now, as we speak, Olema Pharmaceuticals is trading at exactly $19.85 USD, showing an absolute monster intraday gain of positive $11.33, which translates to a staggering upward move of 132.98% on the session. If you were looking at your screen, you are likely seeing a vertical green line that defies the typical gravity of the biotech sector, a move so violent and decisive that it has likely halted trading volatility scanners multiple times this morning. When you see a stock more than double in a single trading session, the natural human instinct, the expectation, is to assume this is a pump and dump, a fleeting moment of retail exuberance driven by chat room hype or a misunderstood press release that will inevitably retrace by the closing bell. That is the expectation, that gravity must assert itself immediately. But the reality here is fundamentally different. This is not a meme stock rally or a technical short squeeze on low volume. This is a structural repricing of the asset based on a validation event that arguably alters the entire risk profile of the company. We are not just watching a price spike, we are watching the market suddenly wake up to a clinical asset that was previously priced for failure, now being priced for serious contention in the massive breast cancer standard of care market. The gap between where this stock closed yesterday and where it is trading right now represents the evaporation of skepticism regarding their lead asset, palazestrant, and that is a narrative shift that usually carries momentum for days, not just hours. To understand why this is happening, we have to look at the texture of the trading volume we are seeing right now. If you are trading this on a platform like Interactive Brokers, you can see the order flow is not just comprised of small, odd-lot orders typical of retail frenzy. There are massive block trades hitting the tape, indicating that institutional desks are scrambling to build a position in a name they likely ignored until this morning. This is the kind of price action that forces us to look under the hood immediately. The catalyst driving this 132% move is almost certainly linked to the high-profile validation of their clinical pipeline, specifically the developments surrounding their collaboration with Pfizer. When a giant like Pfizer steps into the ring with a company the size of Olema, specifically to evaluate a combination therapy like palazestrant with their own assets, it sends a signal to the market that the data isn't just good enough, it's commercially viable. This creates a curiosity loop. Why would a mega-cap pharma company waste time on a small-cap biotech unless the mechanism of action was superior to what is currently on the shelf? That is the question driving every single buy order hitting the market right now. Most people checking their Fidelity mobile app this morning probably saw Olema on the top gainers list and assumed it was a generic biotech buyout rumor. But if we strip away the hype, we find a company that is tackling one of the most lucrative and difficult problems in oncology: ER-positive, HER2-negative metastatic breast cancer. This is the most common subtype of breast cancer, and for decades, the treatment landscape has been dominated by injections that are painful and inconvenient, specifically a drug called fulvestrant. What Olema is doing, and what the market is celebrating today, is proving that they can take that efficacy, package it into a pill, and potentially make it work even better. This is what they call a complete estrogen receptor antagonist, or CERAN. Unlike Tesla stock, where the narrative is often about brand and future promises of autonomy, or Apple stock, which trades on global consumer hardware cycles, Olema is trading on a binary scientific reality. Does the molecule bind to the receptor and degrade it, or does it not? The price action today suggests the answer is a resounding yes. For the average investor using Robinhood or SoFi Invest, the temptation right now is to sell and take the quick profit. It's hard to blame anyone for cashing out a 130% gain. However, the contrarian take, the reality that challenges the expectation of a sell-off, is that even at $19.85, the company might still be undervalued relative to the total addressable market of an oral SERD that actually works. If palazestrant becomes the backbone therapy for women with advanced breast cancer, replacing painful monthly injections with a daily pill, the revenue potential isn't measured in millions, it's measured in billions. That is the math the institutional algorithms are running right now as they sweep the order book. This isn't just about today's news. It's about the probability of success in the ongoing Phase 3 trials shifting from possible to probable in the eyes of the smart money. Let's pull back and look at the mechanics of what Olema actually does, because this is critical to understanding if this rally has legs or if it will collapse. Their lead candidate, OP-1250, is designed to block the estrogen receptor. In breast cancer, estrogen is often the fuel that feeds the tumor. If you cut off the fuel, the tumor stops growing. Existing drugs do this, but the receptor is tricky. It can mutate, change shape, and figure out ways to ignore the drug. Olema's drug is engineered to be complete, meaning it totally inactivates the receptor so it can't play any tricks. It's like changing the locks on the door instead of just jamming it shut. The recent data updates and the strategic alignment with major players suggest that this lock-changing mechanism is working better than competitors' drugs. Remember, Roche had a high-profile failure with their own drug in this class, Girestrant. When that failed, the whole sector tanked because investors thought if Roche can't do it, nobody can. Olema is rising today because they are proving they might be the ones who finally cracked the code where Big Pharma failed. That is a powerful narrative that drives stock prices significantly higher than simple earnings beats. If you are managing your own portfolio, perhaps through Schwab Intelligent Portfolios or a self-directed Fidelity brokerage account, you know that biotech is a binary game. It is usually 0 or 1. Today, the market is voting 1. But we have to be realistic about the risks. The volume we are seeing, tens of millions of shares changing hands, creates a lot of churn. This means that while the price is up, there are a lot of people entering at $19, $19.50, and $19.80. If the stock dips to $18, those late entrants might panic, causing a flush. This is why trading this on a platform like Interactive Brokers, which allows for precise order routing, is different from simply hitting buy on a simplified interface. You need to be aware of the bid-ask spread, which is likely widening right now due to the volatility. A market order here could get filled significantly higher than the last quoted price of $19.85, so limit orders are your best friend in this environment. Let's discuss the competitive landscape because Olema doesn't exist in a vacuum. They are fighting against AstraZeneca's camizestrant and potentially other oral SERDs. The reason NVIDIA stock commands a premium is that they have a moat in AI chips. Does Olema have a moat? Today's move suggests the market thinks so. The specific chemical properties of OP-1250 allow it to achieve high concentrations in the blood without being toxic, something other drugs have struggled with. If they can combine this with CDK4/6 inhibitors, another type of cancer drug, safely, which is exactly what the Pfizer collaboration is investigating, they could become the standard combo partner for every major breast cancer treatment regimen. Imagine being the company that owns the peanut butter that goes with everyone else's jelly. That is the strategic position they are angling for. For those of you watching the Robinhood stock trading charts, you might notice that the RSI is screaming overbought. Technical analysts would tell you to short this immediately, but in biotech, overbought can stay overbought for a long time when a fundamental repricing is occurring. When a company goes from being a speculative science project to a likely commercial success, the valuation models break. Analysts at firms like JP Morgan or Jefferies have to tear up their spreadsheets and start over, putting in higher probabilities of approval. This creates a wave of upgrades. We will likely see price target hikes hitting the wire later today or tomorrow morning, which could provide a secondary catalyst to keep the stock floating above this $19 level. However, we must address the cash situation. Biotech companies burn cash like a furnace burns coal. Olema has a runway that they have guided into 2027, which is healthy, but when stock prices spike like this, management teams often take the opportunity to raise capital. It wouldn't be shocking, and you should be prepared for this, if they announced a secondary offering to sell more stock at these elevated prices. While that sounds bad because it dilutes current shareholders, it's actually good for the long-term health of the company because it fills the war chest with cash to fund these expensive Phase 3 trials without worrying about bankruptcy. If you are holding shares in your SoFi active investing account, a secondary offering might cause a temporary dip, but it cements the company's survival. The comparison to Tesla stock is interesting here not because of the industry, but because of the sentiment. Tesla bears were right about the valuation for years until they were suddenly wrong because the narrative shifted to execution. Olema bears were right to be skeptical of oral SERDs because so many had failed, but today the execution narrative is taking over. The data regarding the combination with ribociclib, a Novartis drug, and the new trials with Pfizer's assets are the execution proof points the market was starving for. Let's talk about the macro environment. We are in a market where